Hello, traders. Thanks for joining me this Monday, the 27th of September, 2021. It's 8:02 a.m. Chicago time. This is episode number 2081. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The first thing I have to bring up is that Periscope, or now known as Twitter media, is not operating properly this morning. It's not able to set up a stream, so there's some issue going on there that I'm not aware of. So that's where that stands. This is why we don't have a a stream today over there. Staticky sound. Okay, let's do this. Let's turn it down and bring the mic closer. How is this to you? Does this sound right? All right. Anyway, derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's what we've got today. We've got a mixed market posture. The NASDAQ really getting a kick to the teeth here a little bit. The NASDAQ's actually below Friday's open after having pushed higher in the overnight session. The NASDAQ created a failed high formation. Bit hot. Okay, thank you. A failed high formation, and and then came back and took back the entire range and pushed through the entire range of Friday and pushed through the low of Friday. We are actually holding Friday's RTH low. We see that the bonds have made a move as well overnight, have popped lower a little bit and have been rallying back up, coming into the full session VWAP at 160 and 18. And 18 in the bonds. So interesting start to the day. As far as key earnings, concentrics, the earnings I look at are filtered by estimated revenue of 1 billion or more and an importance level, a high importance level. The key elements to what we've got going on here, the key element to what's going on here is that the U.S. fiscal deadlock is really looming because the federal budget expires. Overmodulated. Man, can't get it right. All right. It's incredible. But I appreciate your feedback because there's not a good way for me to test the sound on the stream. So anyway, the fiscal deadlock, the federal government budget comes to an end here in a couple days, and they need to push some sort of resolution through. So that's one piece. The German election has taken place. The opposing party to Angela Merkel's party have taken control, the Social Democrats, and they will have to form a coalition government. They only took a lead by about 1.6%, so they're going to have to work with a couple of other parties in order to form a coalition government. And that's very important because Germany really is the engine behind the European economy, and therefore always Angela Merkel over the last 16 years has taken a very prominent place, almost acting as the prime minister of the Eurozone, really. So this is very important, and it's reflected in the DAX in front of you. The DAX popped higher as that uncertainty sets aside. Better COVID numbers out of the EU and the US also help push prices higher early. However, the problems with natural gas, there are some severe natural gas problems in the UK that are putting some companies under. The price of gas is so high, it's putting some businesses out of business. Steel mills, anything that requires heating using gas. And so this could be a dramatic drag on growth, and we're in a state where we want the growth back in the economy. And we're also noticing that crude oil has pushed 75. Crude trading at 75.33, up 182 basis points. There's a shortage globally and a demand globally for crude. So that's likely to be absorbed. But for now, being as it is, crude is an input into many, many different products. This is likely to create some complications for the Fed and for inflation management. So that's those are the key items that I have in front of me. The S&P now has traded 240,000 contracts in the overnight session, which is higher than the expected amount of 220, or the most common amount of 220,000. The range is quite high, 45 points from 44.72. Remember, 44.73 and a quarter is the MC point of control up in this range. That MC point of control goes back to August 23rd through early September. We pushed to 72, so we missed that by about 4 or 5 ticks, and then we sold off, really led by the NASDAQ in the overnight session. So we've got pretty good range, pretty decent volume. We do have what looks like a reversal trend going on in the ES, and what this is likely to mean for us is that we are likely to see some pretty decent movement coming into today's session. So this is what we would want to see coming in as day traders, and that's what we've got. Again, the NASDAQ really pushing the 1% down mark from prior settlement, is well below prior settle. Prior settle is at 15,318 or so, and it's currently trading at 15,178. And really taking back a lot of the territory from Friday, the rally on Friday. So that's that. The other thing we wanted to discuss is the expectations on Friday. Friday's expectation is that we would pull back slightly, given the channel that we had formed on Friday. We'd pull back slightly, but I would expect it to break higher and push this 44.30 area before falling off. And I expected there was a potential, given the way Friday was playing, and we were below this low volume node, there was a potential that we would go for this 44.01 low and start moving into the high volume node from the prior session. The other scenario is that we do finish finding those buyers, and then we pop higher and work our way back to 44.40, 44.37, 44.40. That's the secondary scenario. Here's what we got on Friday. So Friday, lower rotations. We managed to kind of pull back a tiny amount and then generate what looked like a bit of a drive. So it looked like an open rejection reverse type open. Pretty strong drive up right off the open. We pull back and then we push through the low volume node immediately, and then we push into the point of control of the prior session, take back the closing and settlement price of the prior session, and then we end up getting into this downward channel. But overall, Friday was a balancing day that ended up breaking higher later in the session. The delta was strong and trending, holding steady positive or trending up on Friday. So overall, Friday was a buying day, and we ended up holding the point of control on Friday for Friday's session on top of Thursday's session. And what this sets up, when we have balance being right on top of each other, what this sets up is a very likely move away from that area, and that's what we got overnight. So looking at the overnight session, we open and we immediately pop off and finish up that top at 44.53. Recall 44.50 to 55 had a tremendous amount of volume and selling coming in on Thursday, so another push in there sets up a short on Friday unless it breaks through 44.60. And so this is what was expected, and overall that worked out. It came in late in the session, but the overnight session did take that out, pushed to 67.50, as I said, to 72. And then the key area above, test area above, is 73.25, and then above there, 80 is big. 44.80 is a big area, and I expect to be short into that area, or at that area, or around that area, or scale in once we get there. I'm looking for a return down, and unfortunately that was taken away. And it's not going to happen today's session. It looks like it was taken away, and so we end up with a multi-distribution reversal trend profile with a point of control that just shifted down. Notice the point of control shifting down to where we were on Friday, where we were on Thursday, basically right in balance. So we have this this P-shaped profile. This is short covering profile. It's a short squeeze. We found balance. Then on Friday, we found balance up here. Then today, we actually had been holding balance in the upper distribution. So there are three distributions today, really. We were holding a higher distribution, which sets up a pullback and a push higher into 44.80, a struggle at 44.80, and then likely a push into 4,500. 45.10 is the next area, 45.35 and new all-time highs. That's the basic map. If we continued higher, now what we've done is we've pushed back into balance. So despite the large range and the amount of volume that's going through, we're coming back into balance. Just weigh that, add that to your contextual read coming into today's session. Understand that we have range and we have volume, so it's likely to have some force behind it. The movement's likely to continue, but we may see it kind of sticking in this area. Okay, so that's the context. When we say context, that's what we're talking about. Make sure you don't lose sight of what the real context is. Last week was very interesting. Let's zoom this out. Last week was very interesting. We continued one-time framing down on the weekly. So we continued to push to put in lower highs, lower lows. The lower highs are what's important. And then we ended up holding a double top with a lower high on Friday to Thursday. And we have a little bit of a weak structure beneath us. So what we've done on the weekly, we are also in balance. How is that? What does that look like? Let me expand this a little bit. Actually, let me thin these bars out so you can see what's going on behind. So if I thin these bars out, look at what's happened here. Balance, right? Relatively decently tight week the week before. Then we break below on Monday. We have this huge gap up into 16.25. We breach the gap on Thursday and we hold Friday. And given all of the action last week, we essentially moved from 43.50 balance to this 43.50 balance to 44.35, which is the prior week's, the 44.35.40, which was the prior week's MC point of control. Volume point of control. So what we did last week is we reached down, checked below, found balance, came right back, and we are in line with the balance from 2 weeks ago. And then from here, what we would expect is the market would form a base. So what we have here is a market that tested below, found its buyers, and then generally comes back into balance, which is what it did very successfully. It balances out, and then it's likely to start forming a base for the next rotation up. Although I think it'll still have a hard time pushing through some of this stuff. Where does the 80 level come from? Right here. I cannot draw a straight line with this thing to save my life. This is the 78-80 area. This is an important area that we're coming into here, and we are holding steady right in the middle of Friday's range, right on top of the MC point of control from last week. Just remember, as we come into today's session, that's a very important piece of information, that you've got the advantage of seeing inside the bar. This is why we use volume profiling. We can see inside of the bar to see where trading actually happened rather than looking at the bars themselves. Because if you look at Friday's action, Friday was an inside day. However, it was an inside day on top of balance, which means that it doesn't mean very much other than the fact that the market is coiling and trading is being facilitated. I mean, the volume going off these prices as we approach 44, 40, there's a lot going on there. There's a lot of activity on the tape, in that area, and that's why we form these points of control. Just a quick overview of the overall market. This is my overview chart. So this is an 8-hour. I sometimes do 4 hours, sometimes 1 hour, depending on the detail I'm looking for. This is an 8-hour chart. It shows us battling the MC, the VWAP, the monthly VWAP right there. Same with the Dow. We took off above the monthly VWAP and are pulling back to it. The NASDAQ went to the monthly VWAP, and you can anchor your VWAP or however you want. It doesn't matter. But I prefer to use volume rather than a period-based moving average. This is a volume-weighted average price. You can see the NASDAQ kissed its monthly VWAP. It is pulling off. Crude is breaking away. Crude is bullish and is breaking away from the consolidation it held at the beginning of September, and it had broken through, pulled back right into the MC of that consolidation, which was around 69, and has now used that as a base to push through. So crude is very likely to take out that top there. Looking at gold sideways, but still relatively weakish versus its VWAP. Same with silver. The bonds, the notes have really broken away this morning from where they've been for the last few sessions. Remember, bonds, when the bond price falls, yields rise, which is bearish for the market, bearish for equities. Generally, these things move opposite each other. As money moves out of risk, it goes into safety, it goes into treasuries where the money's guaranteed by the federal government or some government. But right now, notes and bonds moving lower means higher yields, higher cost of money, and this reaction in the NASDAQ is potentially the result of that. I don't know. I try to avoid creating a reason for things. You see the same thing in the bonds breaking away from their monthly VWAP. We've been kind of chopping around in here, and we're breaking lower. Why am I going through this with you? Because I do this ahead of time, and I don't go over it, and I think all traders should have a holistic view. The euro is falling, dollar strengthening. The cable's falling, dollar strengthening. The Swiss franc is falling, and the yen is falling. So all of it is pointing at higher yields and money chasing the dollar as a result. So this is the big picture. Let's take a look at what's expected for today and have you guys move on your merry way. By the way, for today, for this week's, the key figures for this week were durable goods that came out this morning. Tomorrow we get GfK consumer confidence out of Germany. China has MBS manufacturing PMI for September on Wednesday. Caixin manufacturing PMI, that's Wednesday evening. Thursday, we have the inflation rate out of Germany. Japan also releases its Tenkan Large Manufacturers Index. And on Friday, we have consumer confidence out of Japan, inflation rate out of the EU, personal spending and personal income out of the U.S., and ISM manufacturing out of the U.S. That's basically the setup for this week in terms of economic releases. Let's look at what's expected for today. We'll spend a couple minutes doing that. What I've done so far in this broadcast, which is, again, apologetically long, is to set you up with the narrative that is taking place. And the biggest part of it is that the market has moved back into, despite breaking higher, has moved back into balance. So coming into today, we expect resistance, and again, this is what was expected on Friday, but Friday pushed right through the low volume node, so you stay off the short side. But we've got a low volume node right at settlement. The expectation this morning is a push up responsive, a push up towards that settlement, consolidation back to the overnight point of control, and I expect us to breach the overnight low and start working our way towards that 44.16 quarter, which is the gap high on last week, and it was the low. Wow, that 25 looks awful, which was the low the week before. This is the area I'm looking to test before it bounces back up and comes into balance again. This is the primary scenario, that the market is just having a hard time holding on to these higher prices. The secondary is an open that pulls back and then immediately pushes into settlement and then squeezes through Friday's high at 44.53 and 44.55. This is an important area up here, likely to squeeze in there, battle, and then push, and then very quickly start working itself up to 80. Again, 80 is a big area up here. 80, it's really 79 to 83. It's a very thick area up here. This is what I'm looking for on scenario 2. This is the less easy path, so to speak, for the market to follow today to get its job done. But that's the price discovery that I'm expecting today. Just please remember, we're opening in balance, but we do have good volume and good range, so there should be pretty decent opportunities. Okay. Hopefully you pick something up today. Good luck, and I'll catch you tomorrow morning. Take care.